sure you can hear me.
Yeah.
Yeah.
Here's the based on points, right? So on the options, if I buy $100, if it goes to zero, I just lose $100. But for futures, if I have $100, there's no limit in how much I can make or lose. Let's just say I do a short and I put in $100, I could technically lose 50,000 because it's based on points. So every point it goes up or down. You know.
Did that man just say stocks go up and down?
Nah, they go down and up.
Oh, that's right. And then you gotta buy high, sell low.
Exactly.
I forgot. It reminded me.
You talk all about in the mentor shit. They go up, they go down.
Exactly.
Or get sideways.
Even when it's sideways, it's going up and down. What's up, y'all?
Yeah, I'm just waiting on IWM on 292.
I'm on YouTube as well. Yeah, so we got, 20 minutes till the decision and then an hour till this dude speaks. So, y'all be careful, man. I made a bag this morning. I saw you banked on the IWM.
Oh, yeah, bro. I got back in. I got another fee out and literally cashed it out. I'm all out of my place right now. I'm about to get back in once I see the retest.
Yeah, I scalped it. I did 1 DTEs up below that 290 last week's low.
Oh, okay. Yeah, that's good.
Yeah, it didn't do too crazy. It hit like 50%. But I caught that head and shoulders on the SPX. What I sent out yesterday. This could be just retesting, but obviously it's FOMC, so who knows?
Yeah, that's true.
And it's like near that big demand. Let's see. Yeah, I mean, she's literally right at last week's low, so it's like, are they gonna fake breakdown here, or fake breakout to grab liquidity and push it lower, or is this just a reclaim for higher?
I think it looks like they're making liquidity to push lower.
We'll see. We'll see what this dude wants to talk about. Baba, I'm still holding Baba, y'all. I'm in lightly, like I said. I think I sent my position here yesterday. Yeah, we banked yesterday too. ZS. And we took ZS yesterday. ZS was like 50%.
Bro, Zeta would have been a good swing. It made higher high.
Yeah, that's all I got from Baba. Very, very small. Swings haven't been good. Except for SPX. SPX overnight has been crazy. You just need to break that 116 on Baba.
Oh, word. Niggas ain't gonna call me and tell me.
PDD! Bro, I should have went with PDD. What's up, Jay?
Oh, fuck off. You ain't calling me. You gonna lie?
You hurt, bro.
I am hurt.
Shut up.
I am hurt.
Why you hurt, Jay? Why you hurt, bro?
I just caught me a nice little move on goddamn Amazon earlier.
Joe.
For like 110%.
Pete. The link's in the bio. I don't want to do that. I have other people from other Discords. I don't want. Pete. Bro, them SPX calls I bought yesterday, I had 3 of them for like two bands each. I saw them at low day. They were like 8-9 bands. I was so hurt. I sold them for 3 bands. I was so hurt. I literally missed out on like 20K. My boy E printed on some spike balls. Good. Ray hasn't took a trade today. Demon took a lotto. What was I talking about in the chat? I did see some flow on gold. Let me pull that up. If I play music, am I gonna get blocked on YouTube? I'll put some background music.
What? Are you going live on YouTube too?
Yeah. Ever since I got this fucking PC, bro, like this shit's fast. I could do everything at once.
You gonna be Twitch streaming too now?
Twitch, TikTok, what's the other one? Kick.
OnlyFans?
Might get to that point.
Damn. You can now pull a loan against your XRP and Bitcoin and Ethereum. Without selling your assets. That's not bad.
Yeah, as long as SPY is below 740, y'all, you cannot be bullish, but you can't be bearish once this is at 730 either. You break 728, boy. If 728 breaks on SPY, I don't think it's gonna do nothing for FOMC, honestly, unless it's something like surprising. Cause we have those big earnings after hours. Hourly, this could just be a retest of the structure too. You could say this is this little structure here. It's too tight, too tight. I'm in puts, but I only have one runner left, so I'm not really in puts. I just got a runner.
Hey, you two, follow my Instagram, Israel Ray Money.
Yeah. Yeah, talk about Instagram. Shit, follow my Instagram too.
Did somebody really just pour themselves out on the chat?
He's being wide. That's my IG, y'all.
Follow my OnlyFans, Halos, Rainbows.
Oh, alright, that. Put the link up.
Probably look good. Hopefully she does this thing. He's being wide. We'll see. FOMC. FOMC. I'm gonna stream it here too. I'm gonna pull it up once it's ready. Does anybody have a link for that?
That's the Warsh.
Yeah. I'm waiting for Federal Reserve to post it on their YouTube. Hopefully she does this thing. We'll see. FOMC. FOMC. I'm gonna stream it here too.
Man,
I'm
so
gonna
look at
pull
a
it
side,
up
blur the tie and figure out where the market's
once
gonna
it's
go.
ready. Does anybody have a link? Well, he won't speak till 2:30, so this won't be on for a minute. So I'm gonna put that to the side for now.
That's gonna be nice, 2:30.
Oh, 1:30 my time. I'm in Houston, Central Time. Well, he won't speak till 2:30, so this won't be on for a minute. Oh, 1:30 my time. Yeah, YouTube tends to lag, so it's better to be in the Discord. That's how YouTube works for some reason. That's why I can't live trade on YouTube like that. That's why I can't even do that either. I was like, that's why I have my channel up, because if I alert something, I thought I was sitting on time, but never mind. I'm wrong. That's how YouTube works for some reason. That's why I can't live trade on YouTube like that. That's why I can't even. Let's see what the flow looks like, you know. That's why I have my channel up. Let me pull up my. I thought I was sitting on time. I'm logging on this. I'm wrong. Shout out to my boy Banks, ITM. Yeah, Gamma still. Control node is 735. That means that's basically if we're above it, we're bullish. If we're below, we're bearish. That king node on SPX is still at 7,300. QQQ. There's some dilemma here. There's a king node at 685, which would be crazy. That's a $16 jump. Control node is 730. It's not impossible. That's basically if we're above it, we're bullish. There's some dilemma here. That king node on SPX
Hey,
is
Clark,
about
what's that website you're
7,300.
affiliated with now? YouTube?
Baba control nodes at 120, so hopefully he pushes sometime tomorrow. You said what, bro?
Yo, what's that website you affiliated with now?
$16
What's that
jump.
about?
This is Gamma? It's not impossible.
Nah, it's like HTX, something like that.
Oh, it's not a website. It's just a broker. It's a different broker, and that's more like for future trading. It's like forex. It's not forex. It's like forex. It's futures. Like you could trade Google, Apple, Microsoft, whatever. But it you know how you can trade futures like MNQ and things like that. It's basically the same thing. It's but you can trade stocks. It's not a website. It's just a broker.
Oh, so it's just another brokerage, basically.
And that's more like for future trading. Yeah, basically. It's like forex. You're hearing double. Do you hear me double on YouTube? If you're on Discord and YouTube, I would turn off the YouTube, honestly.
YouTube is coming in through like it might be someone else here listening, but it's like delayed and just coming through.
Test. Let me see. Yeah, because I don't even hear myself, so.
Now it's not coming double. Now you are good. Earlier it was double.
Okay. Let me see if I can fix that. If I can.
So Clutch, during the FOMC days, the options prices are also elevated, right?
Yeah, I mean, y'all saw the prices of SPX today. It was very, very pricey.
And did you sell your puts that you got last night?
Yeah, I sold them. That's why I was like, I looked back today. I sold them before I went to bed. I sold them before I went to bed because obviously I didn't want to. There's no stop limit after hours, but yeah, it was just good profit. It was really good, really good profit.
Your head and shoulders worked crazy today.
Yeah.
Like you mentioned, yes.
I actually went back in on puts, but they were so pricey. I literally got in right at open. Well, not right at open.
So
I got
you
in.
never sell puts, right? Like you never do the sell first and the buy later, right? You always buy first and sell later, correct?
Yeah, I'm always buying and then I sell it. But yeah, I literally got in. I got in on this candle because we couldn't hold above that 740. And then I sold like a jackass like right here just because it's FOMC. And then I left the runner.
So how do you do the runners? Like you buy like let's say 5, you sell 4 and keep 1 runner, or you sell 3 and you keep 2 runners, or it depends.
It just depends on where my price targets are. So like if it was like if I only had 2 price targets, I would probably sell half at the first one, and then if I get to my second one, I would sell like another half, and then just leave 1. Like right now, like yesterday, I had 4. I had 4 contracts, and then I sold 3, left the runner, then I sold it, and then I got back in like a super cheap one. So I just basically rolled down to like a super cheap one, and let that be like my runner.
And you put a break even for that, right? The runner. You put a stop loss for break even always.
Usually, it just depends on how much I made. So if I made like, let's say I made 3,000 on that trade, and the contract's only 500, I might risk it all because it's 500. I still net profit 2,500. But it really just depends on how much I profited, how much I'm up.
Okay.
2 weeks trading. Yeah, I mean right now you definitely last 2 weeks have been tough. Yeah, it's been a really, really tough market conditions. I'm not gonna lie to you guys, but it has. That's why I've been talking about just size down, especially for swinging, right? That's why I stopped swinging like heavy because they just haven't been working. Market's it moves a lot after hours, and that's why I've been focusing more on day trading. Just there's more success to day trading at the moment. There will be time for swings again, like overnight swings and things like that. But right now, day trading is it's where it's at. But yeah, risk management, you just you got to size according to your portfolio and just can't freak out. And if you're struggling and swinging, then stop swinging. If you're struggling in day trading, then stop day trading and focus on swinging.
What if you're struggling in both?
If you're struggling in both, then you just gotta, take it easy, take it slow, and just watch the market. Like even for me, I've been trading for a couple years now, like what, 8 years. So, I'm still watching the charts every day because the conditions are always changing, things like that. But definitely right now is the best time to day trade, and that's pretty much it. That's just the best time to day trade at the moment. But just don't oversize, and then obviously start smaller too. If you're struggling in both fields, I would focus on day trading more and size very small, and even if it's like one contract, and focus on getting those 20%, 30% gains. Because once you start taking those 20, 30%, yes, it's going to compound over time, and not only is it going to compound, you're going to gain a lot more confidence. You're going to get a lot more confidence. So once you see that same setup, you start sizing up. Maybe you go from one contract to two, and then from 2 to 5, and then 5 to 10, and then 10 to 50, right? Well, not 10 to 50, but like 10. You know what I mean?
Yeah. And Clutch, you also mentioned that this is a good time to buy some stocks for like long term because they're coming at a discount. Can you give some stocks when you get time? Not right now, but when you get some time.
I'm gonna make a list. Q's is officially it's in correction territory, so this is definitely when you will start deploying some capital on anything tech. The only thing that worries me is, I'm in it for the long term anyway, so I don't mind drawdown. I don't expect returns just in like 1 month, 2 months. But SPY's only down almost barely like 4% from its highs. So SPY hasn't even corrected yet. But yeah, there is a few ones right now I'm eyeing. I'm eyeing like AAOI for long term. I'm only worried about this gap fill down here, like $60. I've already bought Oracle. Y'all know I'm in Oracle leaps.
Yes.
I want to buy more.
So leaps means you got it for like next year. Next year when you say leaps.
Basically 2029.
Oh, 2029. Okay.
Yeah, I have. It's 2028, but it's like I think it's like December or September. I can't remember what month, but it's the end of 2028. But if she dips down to the hundreds, I plan on buying more. CoreWeave, I'm already in this, but I think I bought a little bit more today. I really want to load the boat if we can get to like 40 bucks and fill that gap down there. Probably buy some leaps. I haven't bought leaps on this.
And you say leaps is options only or the stocks?
Leaps?
Or
Yeah.
both? When you say leaps, is it options or stocks or both?
Leaps are basically options. They're just longer dated. It's like a swing trade, but like years out.
Okay, got it.
I think Palantir's all right. I think she can come lower. I haven't got a position in SpaceX yet though. I want SpaceX below 100. Yeah, but there's some good ones. SMR, I'm already in this too. I bought leaps on this one. It's very, very cheap. But shit, we got 5 minutes to FOMC.
What's your view on ASTS?
Service now is a good one. ASTS looks good. I'm a buyer if we can get back in the 40s.
Okay.
Yeah, this would be a really good buy. I need to do more research on the company because they don't look profitable. Yeah, they're not profitable.
Okay.
I'm not going to invest in something that's not. If they're working to profitability, then yeah, because that's how Robinhood jumped up so much. Because they weren't profitable at some point. Like they were not profitable at all, and then they started becoming consistent, and then they started throwing out big numbers, and that's why you saw that increase of like explosion. So yeah. But AST has got good buy around 35, 40
Around
bucks.
40, 35, 40. Okay. Thank you, Clash.
Yeah, I like this. And obviously, if you always want to get like an early entry, you can. Like right now, you can go in. Let's say you plan on buying like $5,000 worth, you can buy like 10 shares, and if it gets to your next level, then you buy like 30 shares, and then your ultimate level, then you go in with the rest of your position. Because sometimes it won't pull
Okay.
back as much as you want it, and then it'll just take off.
Got it. Okay.
Trading through FOMC, maybe. Depends. I don't plan on trading right at 1 o'clock. No, I don't. I probably plan on doing like a straddle near the end of the day, or after Warsh is done talking.
Clash, do you keep a track of how much profit you're making every day and how many trades you're taking every day? Do you have like a sheet where you track everything? Percentage of wins, profits made or something or no?
Yeah, I journal my trades.
Do you have a
Like the normal trades. I don't journal lottos. Lottos are just like boredom fun trades. Oh, somebody's at my door. I need to figure out how to get my display on YouTube 1080p because in the Discord is 1440. I'll make a video on the good long-term stocks. I need to really go through the list and see what everything's out at. Like now, that was a good buy for earnings. She never broke. She tried to break that trend line. Never triggered. CRM's another good one. Yeah, I'm in SMR. I think Quantum's a good buying opportunity soon too. All right, we got a minute left to the decision. Let's see what happens.
Yeah, I don't know if you talked to Los recently though, but I was talking to him while nobody was on here. Man's making some progress. Actually doing pretty good.
What lows?
Yeah, Los, good. Right now he's just deciding on whether or not he should take like a full-time good paying job or just part-time. He's trying to decide on that.
Rate is unchanged.
It's the same thing, yeah. 3.75. It did just make a IWM jump to 292. Trying to see if there's going to be a rejection. Burberry going up, so you know, it might just keep on going up. This might just be a fake out. They make war outfits, Burberry, Hugo Boss.
Boy, you about to print. Baba breaking out.
You think this breaking out's gonna hold clutch or not?
I don't know. It usually gets more volatile once the homie starts speaking. We can get above 740 though. We could definitely push for pre-market highs. I wouldn't chase this candle.
Yeah, I feel that.
What did the numbers come out to?
It was just unchanged.
You turn it up.
Fletcher, are you familiar with Kevin Warsh's strategy or like kind of thought process of like switching the way they view their policies?
Not really.
Because I don't remember the time frame. Because he wants to try to like view inflation and all these other like major kind of points of data like from a different lens, and it would basically change the way the way that he's trying to do it is he's trying to make everything look better. But I don't remember the time frame that it takes for like people to adjust to that, so that they're like the numbers look better. Does that make sense? I don't know how to like explain it, but I just wasn't sure if you knew the timeline on that.
Yeah, I'm not too familiar with his strategy. I just know Trump praised him a lot, but he wants them to do. He wants them to lower interest rates.
Yeah, that's what his goal is to like change the way that they view inflation, and so then they'll be able to lower interest rates, and then that'll obviously pump the market. But it takes us like I think it takes a couple months, or like 8 months or 12 months, for that to be like effective throughout the entire. So I didn't know if you knew that timeline or not.
And I mean, I think even with like the whole war thing, it's like, inflation's gonna get worse, and gas prices are still up. So it's like the everyday consumer is still struggling. So it's like, what does he do? Does he follow his plan or Trump's plan?
Yeah, that's fair. Do you think that if whenever the war comes to an end, whether it be, well, it's got to be through some sort of kind of treaty, but do you think that'll pump the market? Or do you think it's kind of already priced in the war and it's not really gonna move that much?
I think it'll definitely pump the market for at least that day. That day will pump, and then I think after that, there won't be really no catalyst to pump the market. So, am I correct or something? Who knows? That's the thing. Q's already corrected. SPY didn't. So it's kind of like, you haven't really seen this in a long time.
Do you think that that midterms could be the next kind of catalyst?
Oh, definitely.
Pump it or?
Definitely.
Okay.
Those are buying. Remember, we still have earnings after hours, so.
Was that for Nvidia?
No, we have earnings for like Meta, Microsoft, Amazon. I believe. Let me see. Microsoft, Meta, Robinhood, ARM, QCOM, LRCX. Yeah, a lot of big names. We got 20 minutes till this homeboy speaks. This could just be a lower high, y'all. So, like I said, if we get above 740, then definitely consider some calls. But right now, you don't want to go long, especially when he's about to speak. If we can get back below 735, then open the shorts down there too.
That's a true gamble, that's for sure. That's why I got out of my position and wait until it closed.
Q seemed to be a bit stronger.
Could you explain support and resistance to like a first grader?
Support. So you gotta think about it like a basketball, right? Or like a trampoline. Support. You're bouncing off support, right? That's a trampoline. But say you have a trampoline in your office, right? And Resistance is your ceiling. So every time you come down to your support, which is a trampoline, most of the time you're going to bounce, right? Resistance, you're bouncing off the trampoline and you're going into the ceiling and you hit your head on the ceiling. What's going to happen? You're going to hurt your head and you're going to come back down. So if you're bouncing so strong and you break through the ceiling, somehow you just magically just burst through that ceiling, right? Now you're on the second story of this of your office or your house, whatever it is. You know, you might land on the second floor, and now that previous ceiling now becomes your support, right? Because now you're standing on it. But there is times in the market that you break through that ceiling, right? But through that hole, right? You're going through that hole. Sometimes you won't make it to the second floor, and you'll fall right back down through that hole and come back down to support. That's kind of like what SPY did yesterday, right? So this 740, it broke it, right? It broke it and it held above it, right? That 740 was basically your trampoline, but it couldn't hold through that trampoline enough. You didn't make it through the hole far enough to hold into that second floor, so all you did was come back down to support. If that makes sense. And then same thing with what's up?
No, I was just saying it just doesn't make sense on like from a contract perspective. Because like if you're going to the same place, I feel like you'd sweep underneath the low, or you're like for this instance your support. It's like I feel like you'd sweep underneath of it, but then collect stops. No.
Yeah, I mean basically that's what it did, right? We went below 735. It rejected that. That was the ceiling, and then it got back above it and it held it. And obviously we had the catalyst of FOMC and pushed it. All it did was push it back to that next ceiling.
Okay, I guess that makes sense.
Yeah, so if you're bouncing on the trampoline and that's your floor, and somehow you come down too fast to the trampoline and you break through it, you know, you're gonna fall down through the trampoline and go under it. So now now the bottom of the trampoline, you know, you're gonna try to put your head up, and more than likely you're gonna reject off that trampoline and come back down. So
but like, why are they protected zones from like a large institutional standpoint? Why do they protect those areas?
Just orders. I don't know. Just market makers that have their orders set there and demand zones. I mean, that's why I'm like, you don't short into demand, right? Obviously, you wait for the break. Like you wait for it to break down, retest, and confirm that it's a short. Same thing with longs, right? You want to wait for this. For example, right now, the instances are we either get back above 740, watch for it to hold, and then we take it higher, or we fell that last week's low, which is our floor for now, fell it, reject, and then go lower back into lower day, and then possibly even lower. Who knows, right?
Yeah, that's all news driven.
Yeah, and then in between here, you don't touch it. Obviously, you can always try shorts here because like your risk reward is very small. Kind of like what I did in the morning, right? I shorted here. My risk was this much.
Yeah.
My price target was at least here, and obviously gave us more.
Yeah, for sure. Yeah, the risk reward was so good, it's hard to pass up.
Yep.
Thank you.
No problem. See what you're talking about. These welders still on the SPX puts. Interesting. They've been in this all morning. In 15 minutes.
Do you prefer indexes over stocks?
No, I mean I like anything really. But yeah, if you learn how to trade SPY and Qs, you can really trade anything. Well, not anything, because
That's what-
healthcare moves a little
what
bit
I'm trying
different.
That's what I'm trying to get good at with the futures, but bro, it's so fucking hard.
Futures is easier than
like,
options, in my opinion, because there's no data.
I don't know the why.
You're
Yeah.
So J-Dub,
man, it's been a beautiful FOMC.
boy, it's been wild.
Hey, this might have been my best. Well, this has been my best FOMC performance ever.
Yeah, I went too light today, but it's all good.
I went light, but I was up in the hell. I was a spice practitioner, and I caught a little SPX put earlier this morning.
Let's see what that boy Warsh about to talk about, though.
Yeah,
We got
pretty big.
15 minutes, so I wonder if the tie color matters with them.
Yeah, that is a good question.
Asia, I'm glad that that analogy helped.
Looks like SPY trying to hold 736.50 area.
Yeah, but you can't get through that 740.
Yeah.
We get through 740, boy, we gonna squeeze.
Yeah, we do. Well, let's see if Kevin says some gangster shit. We definitely gonna squeeze. Trying to hold this level. Boy, I caught the bottom on this thing.
Don't worry, y'all are on YouTube. Well, I'll be streaming the when he talks about.
So if it works on like oh, go ahead, JW.
Now I was gonna say that if y'all on the call, pull up to the live charting session tonight at 7:30 p.m. I'm gonna walk through this SPY price action, which was some areas were a little bit choppy, but for the most part, this was good price action.
Yeah, I was about to say that, bro. Surprisingly, today's price action was actually very clean. I'm kind of regretting not getting on live.
Yes, bro. Like
It was very clean.
It was shocking, very very shocking.
That new PDT.
Yeah, it was.
That may be that's a good thing to mention because that could be it as well. So.
Yeah, it was pretty clean, bro.
Excited by Warsh.
It was honestly cleaner than yesterday.
It was.
Yesterday was like super slow. Even though it was, it was a good trade to break out here at 740. Today was just like way cleaner. That's why I'm excited for tomorrow and Friday because we'll get the earnings out the way. Well, most of the earnings. There's still earnings tomorrow, but we'll get FOMC out the way. And then some of the earnings are out the way today. So tonight for overnight options though on SPX, we should get some good movement too for futures. So I'm gonna try to alert an overnight today if I get a chance.
I might play Apple earnings.
My boy must have banked.
Apple, bro. If Apple has a good earnings, that shit going to about $260. If the guidance and the earnings is good, they start talking about AI and stuff. Apple is going to 260.
Yeah, I mean Apple's tomorrow. So tomorrow evening.
Because you already at all-time highs, so there's no ceiling. Could do a measured move, but still, at the same time, it's Apple we talk about. I can't remember. Let me look at Apple previous earnings, because I can't remember the last time Apple went like dump or went stupid for earnings.
My low lotto.
Yeah, it's gonna be a lotto for sure.
Oh, you can't even see it.
Yeah, she hasn't really went dummy for earnings as of late. No, she hasn't really done anything for the past two earnings.
Oh shit, we're up on Baba
Didn't
now.
Apple increase their prices or something?
Yeah, they did.
I need Baba to fucking break out, dog.
Oh, you still on Baba?
Yeah, we're green on it.
I got cooked twice last week on Baba. With Nova. And then I think he went at it for a third time.
Yeah, it's been red and green. It's green right now, but it's only up like 10%. It was up 20 yesterday, but I'm in light, so I'm gonna just. There's a lot of flow on it, or some weird flow. There was 120 calls for next week and 120 calls this week, so I'm just gonna hold because it's China. If this shit gaps up like 10%, these 4 little contracts will go to like 2,000-3,000. So I'm cool with that.
Are you still in the BD swings?
Yeah. She actually triggered today for upside.
I'm gonna grab me a buy, dude. Because I do see what you're talking about. I was looking at China the other day. I was looking at HSI, and that shit was pumping the other night. And I'm like,
Yeah, bro. All the China's been pumping, but Baba and Baidu haven't done it. So I'm like, it's a matter of time. Hopefully.
ooh. You see Baidu setting up for a double bottom here?
Yeah, right at that close to $100 support too.
What time is FOMC at?
It already happened.
Yeah, that shit happened already. Shit happened 20 minutes ago.
Well, Warsh is about to speak in.
Yeah, he gonna speak. Yeah.
He about to speak in 7 minutes.
Oh yeah, that's what I'm talking about.
Yeah, I'm about to pull it up.
Oh yeah, I think I might grab me a Baidu. Damn man, she triggered already though. Fuck. I missed a good entry. She's setting up for a 3-3. Yeah, she triggered off the strat.
Who has earnings today? Bro, if they no cap, bro. They meant like if this shit tank shits to bed. Cause the earnings SPY might be at like 720 tomorrow. My take is gonna be flat. I think one of them's gonna beat and one of them's gonna miss and the other one's gonna be flat and it's gonna be like, oh, what does the market do?
Earnings?
Yeah, that's my take.
Yeah.
Obviously, it's earnings. I don't know what's gonna do. This is my fun prediction. Now if like LRCX and QCOM and Meta beat, Microsoft beat, bro, this spot's gonna be back at like 750 tomorrow. There's just so much ARM, QCOM, LRCX, yeah, Meta. Those are big names. Microsoft. The only big ones tomorrow is Amazon and Apple.
Did Amazon bounce back?
Are apples tomorrow or tonight?
Tomorrow,
Free market?
after hours.
After hours.
After hours?
Yeah, I don't know.
That is also
I
terrible.
kind of want to short Apple because I mean she's like overbought like a motherfucker.
I can
Do
see
you think
that too.
Hood's gonna move off of earnings today?
Yeah, I feel like the earnings is priced in or something because that shit just running. Literally the day we played that bear flag and it gapped down like the biggest gap down in I think history. Fucking, that was the bottom. That was the bottom. Like
The next day.
if we just switched after we took like the 2,000% gainer, if we just switched here to calls, bro, like fuck that bear flag. This shit was. I mean, we caught. Let's say. We caught from here a 7%, 8% drop, and then this shit just rallied 26%. That's nuts. All right, let me pull up Warsh. Mr. Warsh. me see if I can. I'm just gonna keep
You
it to the
took a
side.
Q puts on FOMC.
This target typically moves slow because I took his calls today and they were so slow.
Yes, she does. Should we buy some leaves tonight before market close? No, I would wait.
Are you back to break even on CRM?
Almost. It's down like 5% or something. I forgot to add, bro. I'm pissed, honestly. Damn, I only have 2, bro. I fucking should have added like 4 more.
I'm up 112% those leaves.
What they are right now? Like, are they 1,400 yet? My average was like 1,400.
No, they're not 14. Your average is way above mine.
Oh yeah, I know. I got in.
5.5.
Yo, bro, you gotta fucking split it up.
Hey, shout out to Daniel, man. Forwarding your message on the call out. It's like this is a discount. I love that.
Hell of a discount.
Yeah. Well, he got in and I got in.
Laddick, I don't know, bro. Warsh is about to speak, so it can go either way. It's in between here. This is my no trade zone. As long as it's below 740, I'm bearish. Above 735, I'm bullish. So like, this is my neutral zone. So risk reward night right now is to the upside. I will tell you that. Risk reward is to the upside because it's 735 is closer, 740 a little bit further. So if you do something like this, if you hold here, you could potentially even see all the way up here. Now if you lose this, there's big demand down here too. Well, here you go, homeboy. Let's see what he talking about. Yeah, I lowered the music. I turned it off actually.
Good day.
Good day.
My second FOMC committee meeting as chairman has come quickly. It's probably too early to call it a streak, but our discussions again were collegial and constructive. I'm truly lucky to work with colleagues so capable and mission focused, and so determined, like I am, to sharpen the performance of the Federal Reserve. Today, as you know, our committee decided to vote by a 9-3 vote to maintain the target range for the federal funds rate at 3.5% to 3.75%. The committee is continuing its policy of making ample reserves in the banking system. the economy is showing impressive resilience. Even with recent shocks, the trends are positive and reveal solid growth. Job gains have kept pace with the workforce, and the unemployment rate has changed little. Inflation remains elevated relative to the committee's 2% goal. The committee remains resolute. You've heard this before, but we will deliver price stability. As before, the policy statement conveys just the facts. It's steering clear of forecasting, a choice we consider especially prudent at these uncertain times. Uncertainty, however, does not mean a lack of clarity. For some households, businesses, and market professionals, 5 years of high inflation have left a mistaken impression that's hard to shake, that the Fed's implicit inflation target was somehow above 2%. Let me reiterate, there is no soft inflation target. There is no soft implicit target, not on this committee's watch. There's only a target, and it's 2%. Not one of my FOMC colleagues is under any illusion. We have begun a new chapter, and we understand that the 5+ years of inflation above target cannot be cured in 9 weeks, or by a single month of modest price decreases. This Fed will not waver. Our credibility rests on performing our duties and delivering on our responsibilities. Americans are right to expect that because our nation's prosperity depends on it. To the regulars here in the press room, today's assessment might sound familiar, yet there was nothing inertial about our discussions, our policy, or our strategy. 2 economic developments are worth highlighting. The first is a very notable change since our last meeting 42 days ago. Nominal and real yields are materially higher across the Treasury curve. In fact, some of the increases in market interest rates between FOMC meetings are among the most significant in the last 2 decades, ranking around the top decile or so. But if the committee didn't change its policy rate, what happened? In the intermeeting period, market attention centered on real data and real economic developments. Prices reacted in real time to incoming information, and the reduction in forward guidance may have been a factor. Market participants are learning to play the ball, not the referee, and market prices will continue to respond in the direction and magnitude they see fit. This is, in my view, a change for the better, and we're just getting started. After all, the central bank need not always and everywhere be the center of attention. I understand the desire for rolling forecasts and commentary from this committee, but for our part, we need to observe market reaction to developments, direct and unfiltered. I want to stress, of course, that decisions by this committee matter a great deal, and where necessary and appropriate, we will not hesitate to act. A second economic development is one that I noted at the congressional oversight hearings this month, but it's worth repeating. The most striking feature of the economy is the strong growth of business investment. The surge in high-tech CapEx has been remarkable, but that does not necessarily make the Fed's role any easier. In the AI-related category of high-tech equipment and software, the most recent data shows 4-quarter growth rates of nearly 20%. This is helping to sustain the healthy momentum of manufacturing output. More generally, CapEx is preparing the ground for future growth. Nonetheless, the precise timing and magnitude of effects on the supply side remain hard to predict. FOMC meetings produce policy decisions, but just as important is candid discussion of the big things that matter most. That too is a priority in this new chapter at the Fed. In our meeting, vigorous discussion centered on 4 questions, which I will enumerate. First, we talked a lot about the implications of the past 5 years of high inflation on the current policy conjuncture. To echo an old phrase, has the past really passed? Second, my colleagues and I considered the economic shocks of recent years, strained supply chains arising from the pandemic, military conflicts, energy supply disruptions, substantial increases in tariff rates, and yes, the surge in AI-related investment. These differ in their sources. Do they also differ in their effects on output and employment? Third, we took up the related question of price increases arising from shocks. The business CapEx boom, for example, is driving up prices of memory and logic chips and associated AI infrastructure. Do these changes indicate a broader inflationary dynamic, or do we just focus on them because they are under the bright streetlight? Finally, we discuss monetary policy tools and strategies for achieving stable prices. If, as the Fed has long held, interest rate policy should be its primary monetary policy instrument, how much accommodation are we getting from the balance sheet? In all of this, our work is advancing at the Fed. We're asking the right questions. And in this consequential time, we know how very much depends on getting the right answers. Of course, you've all arrived with questions of your own, so let's turn to them now.
Thank you for taking our questions, Mr. Chairman. You've had a couple months now, or 9 weeks, or whatever number it is, to see the markets behave in the absence of forward guidance. I'm wondering if you could tell me what message are you getting from the markets as to where policy ought to be right now?
Yeah, so I think officially it's 8 weeks and 4 days, but I'm not counting. The message from markets is the message from markets. What I've really been trying to do, Steve, as I think you appreciate, your colleagues appreciate, is getting an unfiltered message from markets, getting a direct message, letting buyers and sellers meet at prices for treasuries, for the foreign exchange value of the dollar, and then trying to judge for ourselves what does that mean about our remit? How are we doing on inflation? How are we doing on employment? We're trying not to interfere with that market signal. That's part of the reason why we've been somewhat spare in our words, why we pulled back from forward guidance. So they're reacting to events, I would say, much more directly over the 42 days since we last met. This is a good thing. As I mentioned in the prepared remarks, we've seen a material tightening, not just in nominal rates, but in real rates too. And we're observing it. We're trying to stay out of that because, many of you might be interested in our reaction function. We're interested in the reaction of financial markets.
I get that, Mr. Chairman, and I guess the follow-up question is, if the markets are talking to you, what do you hear them saying? And if it's real rates are higher, it would suggest that that's where the funds rate ought to go.
Yeah, so,
Sorry.
I'm sorry, it's your question. So, interpreting markets is an imperfect business. We central bankers, like market pros, can think these things are overdetermined, but let me offer some speculation. First, as we said in the FOMC statement that you got at 2 o'clock, the economy output is solid. CapEx and productivity are strong. Labor market's solid, steady. The bond market, the treasury market, it seems to be saying that as well. If I were to try to break down, disaggregate the treasury market signals, I wouldn't be able to do it perfectly. But the bond market's saying many of those same things, and that's why we're seeing a tightening both in nominals and in reals. Even while at some level we haven't done much in 42 days, the markets have done quite a bit.
Well, 30% now.
Claire Jones, Financial Times. You seem to have got the family fight you were after at this meeting. We saw three dissents. Could you characterize the arguments that those dissenters put forward,
Why is it
please,
trying to
and
break
tell us a
740
little
here?
bit why you weren't persuaded by them at this stage? Thank you.
So I guess I shouldn't give you their best arguments. I'll give you some others. So you're right. I asked for a good family fight and I got one. That's the purpose. That's the design feature. I come into this meeting, even this press conference, heartened by what I've experienced the last 2 days. Most of our discussion were on the big questions that matter
We're in
to
the money.
the conduct of monetary policy. We didn't sort of hide from them. We weren't scared of them. There was a lot more interaction between and among my colleagues. It was a real family fight. My view, which you've long heard, is that's the better way to get policy right. That's our North Star. So there was a lot of agreement that I heard, that we have the powers, the tools, also the authority to deliver stable prices. No walking back from our responsibilities. There was a large majority support for the decision that we made in the room. But I also want to leave you, Claire, with one other impression. There was nothing inertial about that discussion. It was an active, robust discussion about what's in the full range of what we can do and might want to do in the period ahead. You characterized accurately there was a disagreement about a decision today. I would say that doesn't sort of capture the full essence of the discussion. The path to central bank heaven requires delivering on our remit. These days, that means delivering on price stability. I wouldn't measure that path in 42 days or any one particular meeting. And I came out of that meeting even more confident that this is the right team to win the battle against high inflation.
How much do you think not going in July was down to the cool CPI print for June?
So in 2 words, not much, not much. I'd like to believe that the committee shares my views, which is the historic problem with data dependence is the data and the dependence. We are not relying on any one individual piece of data as cover or as an excuse or as validation. What I care about and what I think the committee cares about is trends on the data. Sure, we got some encouraging inflation data. I think at the meeting 42 days ago, I said something like 63 months of inflation above target. I didn't say 64, though the final calculation might be a close one. So we'll be watching inflation data over the period ahead, but I also don't want you to leave the misimpression that we're sort of breathlessly waiting that. I've called for a task force to revisit both the private and public data we use to make our decision making. That task force is out doing their work. I'll be checking back in with them the next couple of weeks, but I wouldn't say we overly relied on any one piece of data, including that data, which surprised some a couple of weeks ago.
Hi, Chairman Warsh. Thanks. Neil Irwin with Axios. Thank you for taking our questions. So the Fed funds rate is now about 75 basis points below the 2-year yield. It suggests markets think you'll have to tighten eventually, about 100 basis points below most Taylor rule estimates. You're hitting your employment mandate, inflation stays high. Why should rates not be higher today?
There's a lot in there, Neil. So rates are higher today than they were 42 days ago. Markets have made decisions because we step back in part from trying to influence those. Market judgments have moved up on what nominal rates are across the Treasury curve. That doesn't mean we take them as by dictation, but we're observing them. So I think it's a mischaracterization to say that markets haven't reacted because we didn't move today. Markets are reacting in real time. In the period ahead, we've got important decisions to make about the policy rate. Markets in the intervening period, I think, have quite a bit of decisions to make. I'll see if I can put it this way. Monetary policy matters not just by what we say or even what we do. Monetary policy matters by how it affects the real economy. And these prices that we see in financial markets is one of the many ways in which it affects the real economy. We'll be continuing to watch that market information, see how it responds to incoming events, and that can help inform our decision making when we meet in
Thank you.
7 or 8 weeks.
How would you characterize in the family fight the last couple of days of you and the other 8 members who wanted to hold? Was that a strong conviction or was that a hair trigger close call on holding versus tightening?
We might push the pre-market higher.
Well, I think the vote was 9-3. The broader discussion to my ear over the course of the last days showed a lot of agreement on the hard questions. The 4 questions I raised at the outset about what's really happening in the economy with the shocks and absent the shocks. What are our tools and our capabilities? What's the effect on prices on output? I heard a lot of commonality on the questions. Were there different leans on the answers? You bet there was. So could people come to different conclusions? Absolutely. But my own judgment is this is a period of watchful thinking, not watchful waiting. And I think the score on that vote was unanimous.
Thank you, Colby Smith with the New York Times. You've mentioned that looking at the Fed's policy tools is one element of a 3-pronged strategy to address the inflation problem. So I'm curious how you view the effectiveness of those tools. If inflation is too high and not coming down, is the best remedy to raise interest rates?
So that was the discussion in the last 2 days. Is that the dominant remedy? If inflation continues to be elevated through the forecast period, interest rates could well be part of that solution. But I wouldn't say it's in isolation. I tried to describe in my remarks today a point that I made into the oversight committees a couple of weeks ago. I think there was a misimpression by some in financial markets, by some households and businesses, that central bankers like me, we set a 2% inflation target, but maybe we were more tolerable of a somewhat higher inflation target. In economics, we'd call that the revealed preference. And so might it have been rational for people to think, well, their inflation target's somewhat higher. What I heard in the last 2 days, what I've heard in 8.5 weeks is no. We will deliver the 2% inflation target. That is the committee's definition of price stability. So one way, absent the tools that you reference, to ensure that we get there, is ensure that expectations are centered around the right number. And I think we've made some progress on that. I am not suggesting we're done on that. It's worth reiterating. And ultimately, the business we're in, Colby, is performance. We are going to be judged by how we perform. And that's what we intend to do. The inflation target, making clear expectations is one part of it. Making sure we demonstrate we're responsible for it, we're not blaming as another. And our policy tools, like you referenced, is the third and equally consequential part.
How are you factoring the fact that a large portion of the inflation overshoot is being caused by supply shocks, as it's mentioned again in the statement? Does that blunt the effectiveness of rate hikes in your view?
First, on the premise of your question, it was almost as if you were listening to our discussion in the last day and a half. A lot of our focus was on trying to understand and identify underlying inflation dynamics amid shocks. We take these shocks seriously. There have been a series of them that have been hitting this economy. We're not looking through them and saying, oh, they don't matter. What we're trying to understand is to what extent are these shocks broadening in their effects, broadening in their impact on prices that are quite far removed from it. Our goal was to have growth that is broadening and inflation that is becoming more limited, more circumscribed. I'll be the first to admit the shocks make this job in this policy conjuncture a little tougher, but that's among the chief questions we've asked ourselves. And around the room, people have different views on it. I tend to think in the coming months we're going to refine that view and have a better judgment, and we're going to have market prices trying to help inform it too.
Looking like it.
But this run is insane.
Thank you, Mr. Chairman. Edward Lawrence from Fox Business. I guess I want to drill down maybe
And then
a
we
little
have
bit.
earnings
What
after hours?
specifically in your mind would be the argument then?
Imagine they imagine they should just
So I wouldn't
fucking shoot back
characterize
down.
what we did as anything like a pause. I would characterize what we did as a rigorous review of the economic situation. I would
Trump
characterize what we did as a review of the big hard questions, and I'd characterize it as a view of what our own homework is to try to resolve those questions in the period ahead.
I'm gonna try to straddle for earnings.
If you were
I'm gonna do excess
try to
though.
force a description that this was a
Towards the end of the
pause,
day.
I would say financial market prices would take the other side of that. Financial market prices in this intermeeting period, they didn't pause, they reacted to the inflation data in one direction, strong economic growth in the other direction, and nominal and real rates went up. Did the Fed take an explicit change in its policy rate today? No, but I think that's the beginning of the story, not the end of the story.
And if I could, I did want to ask, not forward guidance, but looking forward. Traditionally, a Federal Reserve chairman uses the Jackson Hole Summit as a sort of a reset of monetary policy. Well, how do you look at the speech that you're going to make in August?
I look at it like a blank piece of paper right now. I have not begun consideration with the incredible team here what would go into that document. I think you've characterized it correctly. Historically, at least from my first tour of duty at the Fed to more recent periods, it would be sort of a setting up speech more often than not of what was going to be happening in the fall. I haven't made any judgments on that, but those are judgments we'll have to come to. If I could, in the high mountain air in Jackson, Wyoming, I'd like to also frame the big questions. There is a tendency, especially with the proliferation of meetings and press conferences, to get caught up in the myopic. Did you do this by a quarter or do that? Ultimately, whether we deliver on price stability matters some, the decisions we make in 6 or 7 or 8 week periods. But they matter more, what are the big questions? What's really happening with productivity? What's really happening with demographics? What's really happening to the global economy amid the shocks? Haven't made a decision whether it's going to be a big picture speech or whether it's going to be a more traditional setup for all the action we're going to have between September and December. I will tell you one other thing that I am doing between now and Jackson Hole, which is I'm checking with those task forces. My first principle of establishing a task force
imagine the NDX
is find the best subject matter experts anywhere in the world and put them together, especially put them together with other people who might disagree with them. In the next couple weeks, I'm going to be doing a check back in. I've given them time to sort of think hard about their agenda, their debate, their schedule, and when they might be ready for prime time. I'll be doing a little bit of that checking, and that may or may not inform anything I have to say in Jackson.
Nick Temeros of the Wall Street Journal. Chairman Warsh, I want to follow up on Colby's question about policy transmission. You've said there's no cruel choice between stable prices and full employment. Rates bring inflation down by cooling demand. It's generally thought that can show up in the labor market. If that's not the channel you're relying on, what is?
Yeah. So let me go back to first principles, Nick.
He's about to have a baby too.
I don't believe that either part of our mandate is generally at war with the other part. I do not believe that price stability and full employment is an either-or proposition. There have been policymakers over the last several generations who thought that there is a strict trade-off there. That isn't my judgment. In fact, my judgment is if and when we deliver on our remit, we're going to be satisfying both prongs. We're going to have price stability and full employment. And in fact, if you want to do the most harm to the labor markets, you would run a period of high inflation that's variable such that employers, businesses, wouldn't really know what's going on. So I think the two parts of our mandate are equally important. We have no legislative orphans here. I've been talking mostly about price stability because we're doing pretty well collectively as a country, as policymakers on the full employment side. But we're doing considerably less well on prices. That's why we describe them as elevated, and that's what's taken most of our discussion. In terms of transmission mechanisms of monetary policy, I think different tools work through different transmission mechanisms. The interest rates work through lending channels and credit channels, maybe confidence channels and foreign exchange. The balance sheet probably works through some other channels like signaling and portfolio balance. We're keeping full abreast of all these tools in making policy. But if the suggestion is somehow we're going to be fine-tuning aggregate demand so it catches supply, that's not my mental model. I don't think we're great in the fine-tuning business. We're trying to get supply and demand in broad order, but really what we're doing as we sit here today at this press conference is I think we've got a reasonable sense of what aggregate demand looks like in this economy. We're inferring aggregate supply. We're making a judgment about what productivity is. And in some sense, there's a race between supply and demand. And the surge in business CapEx in and around AI is making that calculation a little harder to judge. But in the period ahead, we're going to be trying to judge just that.
And if I could ask, where exactly was the disagreement today? Was it about the inflation forecast, or was it something more around the
I think it was like
risks,
September something.
The tactics?
She triggered today too, above 105.
So I'm going to let the dissenters speak for themselves.
Kick my ass.
The way I heard it over the last 2 days was overwhelming agreement on objectives and authority and commitment. I didn't hear anybody walking away from it. The judgments as to how best to achieve the price stability, that was probably the question that we were trying to answer. What's the best
first price target is
move?
120.
What's the best strategy?
120.
What's the best way to achieve
125.
And a second question that was asked is, when do we need to make those harder calls? When do we need to make those decisions? And like I said to one of your colleagues, I was comforted that markets in the intermeeting period weren't reacting to us, they weren't reacting to dots or to speeches. They appeared more than ever to be reacting to real-time events. So they're gauging themselves how restrictive the Treasury curve should be. And that, I think, has been a useful development. We don't endorse any particular market move, but I'd also suggest we observe them with keen interest.
Janelle Marte with Bloomberg. Following up on that, there was more uncertainty in the markets about what the Fed would do at this meeting. To some extent, you might think that's what you want to see.
Yeah,
but
somebody in the chat
is there
on
a point
YouTube
at
said
which
they were
you
in
would
calls.
not want to surprise the markets if they were pricing in something with higher certainty that was
Like I
opposite
said,
of
risk
what
reward was
we're
definitely
trying
to the upside.
What are the
here,
risks
but
that you see
up here
associated
now?
with
It's like
that?
you don't want to
So
chase
it's
this.
a good question. Surprise is not the objective.
Unless we could pull back.
Surprise is not
740.
what we're solving.
Start to hold.
We have a clear North Star. What we're solving for is how to make the best decisions.
I personally
Almost
scalped
everything
some
else
SPX on
should
that
be in
break.
service to that goal.
It was
by not
literally like a 2-minute scalp.
spoon-feeding
So
markets,
I didn't catch the whole.
by not
I
previewing our
literally just caught, like,
decisions,
half of this candle.
by not sort of giving nudges and leans. My colleagues and I have found in the intermeeting period, what we're getting is the views from a very accomplished economist. That's the internals of financial markets.
After hours, so they should
Instead
they could
of
erase
just,
everything after hours.
repeating
So
or
I
echoing
wouldn't
what
be
we were
surprised.
saying back to us.
Or we
They're
could be
giving
back
us
at
somewhat,
750 by
not
tomorrow.
perfect, their own judgment.
Yeah.
So surprises are not the objective, but at the same time, I would say we didn't come into this meeting feeling constrained by the full range of alternatives we had in front of us.
So some of your peers have continued to discuss how they think about policy decisions, and if you don't offer your reaction function or your way of thinking about it, how concerned are you that you're ceding control of the narrative?
So not very concerned.
Yeah, I'm gonna
that's
do
a short answer to the question.
XSP. I've never done XSP
when
before,
some
but I'm gonna try it.
people that follow the Fed
Never done
say,
XSP straddles.
Well, we don't want your forecast. We don't want your.
I
We
usually-
just want your reaction function. Part
Yeah.
of me here's what we really want is your forecast. What we really want is your dot. In terms of reaction function,
Yeah,
we sort of
liquidity is kind of
disabuse,
ass. Nah, it's
people
kind
of
of
a
ass.
question that
Like,
may
I don't
or
plan
may
on
not
putting more
be
than
real
1,000
and be
in
out
there.
there. Any central banker,
Yeah, just to
especially
see
a
what he
central
does.
banker where the labor markets are more or less at equilibrium. Any central banker, when he or she sees underlying inflation moving higher, he or she is more inclined to tighten policy. Again, when you've achieved the other side of your mandate, you see underlying inflation falling. He's more inclined to loosen policy. That's my reaction function, and I don't suspect it will cause people to not continue to pry for more, because the truth is, for a very long time in a lot of countries, coming out of the 2008 crisis, we're in crisis mode. We were purposefully providing a lot of information, trying to provide a lot of assurance, trying to tell people exactly what we're going to do, offering forward guidance with clarity as if we're tying our own hands behind our back. Well, in crisis mode, that strikes me as a very prudent policy. But in more benign conditions, it strikes me as worth revisiting. But markets and market participants and reporters have learned to devour all of that information, so I take seriously that the pullback of forward guidance requires some transition. Reform isn't easy, but our general judgment is going to help us make better decisions, and in so doing, satisfy our remit.
Paul Weissman. It's coming. There's a mic coming.
Thank you. When you talk about the 2% inflation target, what measure are you relying on?
Yeah, so I'll give two answers. First, let me give the proper standard answer. The Federal Reserve every January outlines a statement of purposes and strategy. And in that strategy document, which I believe was dated January of this year, it describes a measure of PCE inflation as the objective function there. I have enough of my own, so that's our number, we're sticking with it. Who knows come after next January what we might say about strategy. I suspect the task forces might have something to add. But I'll say this, some version of the Lucas critique, some version of Goodhart's law in economics should remind us that when we talk about measures of inflation or something else, and we describe those measures as being consistent with our objectives, we might make them such that they're not very good measures or very good objectives.
But look at gold.
Broadly, if you said to me standing in front of you, I abide fully by the strategy document, we're going to deliver 2% inflation and not a whisper more. Yeah. But to achieve that, I'm looking at a broader set of inflation data than PCE. So without sort of fully revealing my cards, I'm trying to understand, like my colleagues, what's the underlying generalized change in prices that are happening in the economy. It is not a perfect science. I might have said 42 days ago, I've got a task force for that. But we have a data project that's trying to look and see whether we can't separate the noise from the signal. And so if you would hear a message from me, yes, I care about what the PCE prints are. I care about what the contributions are from CPI and everything else. But my lens is broader than that, even though the remit is quite narrow.
I might try some splat calls.
There you go.
Which candle? Michael McKee from Bloomberg Radio and Television. I'm struggling a little bit with some of what you've said today, and maybe you can help clarify this. You've said over and over again that your job is to bring down prices, to get prices stable, to hit your target, and that you will hit your target. The market says you're not there yet because they've raised rates, but all you've talked about today is talking about it, and it's not like members of the committee weren't there before you talking about it. So I guess what the American people might be asking is, what are you waiting for?
Yeah. So, believe it or not, this press conference is not all I've done today. We have spent an inordinate amount of time in the last 2 days, 2 weeks, looking at our monetary policy strategy, evaluating our tools, thinking hard about the sources of data that we have at our disposal and we wish we had. We've also thought hard about the period ahead. What among these questions will be answered with more clarity, certainly not certainty. So the decision we'd made today, the discussion we had in that room, was the farthest thing from inertia I can imagine. As a point estimate at this very moment, in a choice between two alternatives, you heard the results of it. But I would tell you that this discussion was far more robust and our thinking about how best to achieve that target is advanced. And over the coming months, I expect it to be advanced much more significantly. If you were to if I were to steal a follow-up question, I won't let you, you won't be giving it up. If I were to steal a follow-up question, well, what's the world think about what you've done? I would again reiterate, what we do isn't just about what we say. It's not just about what we do. We're in the performance business. And so if I look at the Treasury curve, if I look at the dollar, if I look at a lot of things that are internals inside of financial markets, I think what they're broadly saying is that this committee does own it, has the credibility to deliver it, and they believe, like I do, that we will. But I don't want to leave you with a misimpression. We've got no magic wand. This isn't something that we're going to be able to carry out in days or weeks, but we're going to deliver on the responsibility that Congress gave us. And today's meeting and the preparation for today's meeting was an important step towards that destination.
I'd like to follow up on the task forces as well and ask, what vetting did you do of the people that you appointed to the task forces? In particular, given Mark Andreessen's substantial political spending, $25 million in just the past year to back candidates who oppose stricter AI regulation, how can the public be confident that a committee he co-chairs will provide an independent assessment of AI's economic effects rather than one aligned with the interests of the AI industry?
Yeah, so I selected 15 incredible subject matter experts to tackle 5 of the most important questions that if we get the answers right, we're going to do a far better job in delivering. And if we get the answers wrong, we have a problem. The comfort that I can give you and your listeners is we're the decision makers. The chairman of the board of the Federal Reserve and the members of the board and the FOMC, we will be the consumers of the outputs from 5 different committees. The judgments we're making will be informed by, but not at all determined by, these outside groups. My theory of the case in establishing the task forces were to pick people with extraordinary talent, depth of expertise, and a divergence of views inside every committee, so they too can have a family fight. This is not outsourcing to people that aren't known and haven't been vetted. This is seeing whether new ideas can catalyze a broader, better, more informed discussion inside the room. And I'm very confident that we're going to be able to do that. I am impressed by the credentials of these 15 people. And full disclosure, I've known almost all of them for a very long time. And I think they're going to give their best views on the subject. But ultimately, these are decisions we're going to make, and we're accountable to our oversight committees and to the remit Congress gave us to deliver.
Bro. I love it.
Hi, Ann Saphir with Reuters. Nice to see you again. So I need a little help here too. You've said repeatedly you have no tolerance for inflation, and yet we are seeing above target inflation repeatedly for 5 years and through your term so far. And sure, you have no magic wand, but you have not taken action. You just gave us a little peek at your reaction function as well. You said that if underlying inflation is rising, that you would tend to think that you might need to tighten. And with the exception of the most recent inflation print, that is what we've been seeing. So could you explain what you mean by no tolerance for inflation and what you plan to do about it?
And I hear from you what I hear more broadly from households and businesses. Impatience. Deliver it already. This is not an excuse, this is a fact. This FOMC, this board has been in business for 8.5 weeks. The patience, the impatience that households and businesses feel have been going on for 63 months. We are on the job. We will deliver. We are focused like a laser on making sure we can do it. But the suggestion that we're going to be able to do it with our magic wand is one I want to disabuse you and everyone else of. But the discussion in the last 2 days give me more confidence even than I had 8.5 weeks ago. This team that we have at the FOMC, the support that we have from board staff, and the new hard questions we're asking, we need to resolve those. And as we resolve those questions, get smarter on those, we're going to deliver on the remit. You don't have to take my word for it. If you look broadly at market prices, they are certainly not saying all clear, but they are working in concert to keep us on our toes, and they have tightened financial conditions in this intra-meeting period, and that has given us, that has provided us some comfort that we've got the ability and capability to deliver.
And is your read or your, I guess, faith in markets' ability to sort of make a judgment and then you to take signal from that judgment, is that, how does that affect you when you come up on the September meeting and markets are seeing a near 100% chance of a rate hike as they see now? How does that feed into your decision making and your thinking?
So we're not going to be constrained by market prices. We're not going to be constrained or take verbatim from what the market's doing. But I think it's useful and to understand that markets can be a very good source of information. Not a determinative source, not a perfect source, but if we're trying to land the plane and deliver 2% inflation, and we take a very useful source of information and we get it all fogged up by giving it our own forecasts, by providing rolling commentary, I can assure you that we're going to have less information, less ability to land the plane successfully and deliver price stability. We're just trying to make sure that that source of information is as direct and unfiltered as possible. It isn't to the exclusion of data sources and opinions and other surveys, but if you're hearing from me, we wanted to make sure we were getting a better source of information. I think in a relatively short time we are.
We'll go to Brian Chung for the last question.
Hi, Chairman Warsh. Brian Chung with NBC News. So you said you'd be open to having press conferences when there's news to make. So today, no change to rates, no forward guidance. For the average household, I guess, what was the news today?
So apparently it was news that I had a press conference. Let me just see if I can offer some clarity on that. Between now and year end, my predecessors and the Federal Reserve committed to press conferences this year. I'm committing to press conferences this year. That might be news to the people in this room and of no particular interest to your viewers and your readers back at home. What I can offer as assurance is that the Fed's on the case, that this Fed chairman feels better about this board and this committee's ability to deliver than I did when I showed up here on the first day, and I showed up pretty confident. I've been heartened by the reception that I received. No doubt in some of your commentaries today, you'll talk about a divided Federal Reserve. Well, that's not the feeling I felt the last couple of days and the couple of days before it. What I felt was a group of professionals, all with different perspectives, different views, different judgments, but eager to roll up their sleeves and have a family fight, and eager to reform the way in which the Fed does policy, a keenness and open-mindedness and curiosity about that, so we have a far better chance to deliver on the remit that Congress gave us. And so I want to leave you with the optimism of a new central banker that we're committed as ever to deliver and to offer an assurance we will. Thank you all very much.
Oh, he's done talking now. I look very flaggy. Alright, I think I'm gonna end the YouTube stream. I'm gonna just stay on the Discord. So, I'll see y'all